Housing prices are at an all-time high. Demand is at an all-time high. Supply is at an all-time low. Foreclosure and eviction moratoriums are extended again. Mortgage rates are at an all-time low, and there's still 10 million people unemployed. What's going on, guys? My name is Austin Zabak, and typically on my channel, we talk about business, finance, and real estate, but you already know what we're gonna be talking about today. So by the end of the video, my goal is to answer any questions you have as it pertains to the housing market. Is now a good time to buy? Is something I get asked a lot. Is now a good time to sell? Or is it a good time to invest? Should I wait for the market to crash before I buy? And there's so many other questions that people are asking consistently, so make sure you stay to the end of the video and we'll go ahead and get through all of that. So we're gonna break everything down one category at a time, okay? So we're gonna go ahead and look at Arizona, which is where I live actually, and I'm a real estate agent and a real estate investor. So this is all very near and dear to my heart, okay? Arizona actually ranks as number one, being up year over year, 13.7% in terms of housing prices, okay? Followed by surrounding areas like San Diego and a couple of others, okay? So let's just kind of hover around here. Now, obviously, there are certain states throughout the United States that didn't see that much of a price gain, but those are more, in my humble opinion, places that aren't as attractive and people aren't necessarily moving to, but they're moving away from, okay? California saw a 9% gain, Oregon 8.5%, Washington 12.1%. Seattle was right up there with Phoenix, okay? And we see obviously a lot of these other places that aren't up that much, with Alaska actually down 1.7% year over year. Now, obviously this is as of November 30th. So from November of 2019 to November of 2020, that is what we're seeing. Now, there's a lot of other reports that I'm gonna talk about here in just a minute. They're gonna give us even more accurate information. But again, these reports do take a little bit of time to actually produce. And so I wanted to go ahead and show you this graph in particular. So there's obviously a number of different things that drive home prices, okay? And we're gonna dive into everything, but you know, the number one thing that drives home prices, without getting too far into it, is supply and demand, okay? So obviously right now, throughout the entire country, we're seeing supply at an all-time low. But the thing is demand is at an all-time high. Sellers don't wanna sell, but buyers are buying at rates that we've never seen before. Now, a lot of that is obviously caused by the record low interest rates, because everybody and their mom either wants to refinance or they wanna go buy a home. Because if you can get a primary mortgage under 3%, assuming you have good credit and all of that, that is a number where basically you're getting free money from the bank. Because when you look at the average inflation rate that is slightly above 3%, I mean, it's a no-brainer. So again, we have a really, really interesting time that we're living in, because the reality of it is the government and the Fed is essentially just stimulating the economy right now, right? They're stimulating the housing market, and in a nutshell, they're stimulating everything. I mean, they're printing money quicker than they even know what to do with, okay? And who knows how long they're gonna do that, right? And obviously, we can peel back that onion one layer at a time, and we can really get into, you know, how long this is gonna keep going, when the market is gonna crash, are we in a bubble, and things of that nature, right? But, you know, we're seeing another stimulus bill that is about to get passed, okay, potentially by the end of February, right? A $1.9 trillion stimulus bill that would extend the moratoriums again through September, or potentially even the end of the year, okay? And all of this plays just a large role in the overall housing market. So you obviously have the government forcing the interest rates to stay low. And they basically said that they're gonna continue to make sure that the mortgage rates stay at an all-time low. But another reason that we have to really look at things is because the reality of it is, as the government or the Fed continues to just print money like it's going out of style, what that does is it devalues the American US dollar. Well, if we're devaluing the US dollar, then that ultimately causes asset classes to also rise. So we're looking at like a perfect storm of everything that I mentioned in the beginning of the video. And that is obviously why we saw, or a part of the reason, obviously, of why we saw the stock market at an all-time high, Bitcoin at an all-time high, and real estate at an all-time high. And we're now seeing silver and gold go to new all-time highs. Because the reality of it is, people are wanting to take their US dollar, which is essentially just losing money, and go take that and invest it into asset classes that are going to appreciate and go up in value. Another factor that I'll mention is that last year we had millennials surpass baby boomers as the largest generation ever in America. And guess what? Millennials are at the prime time to buy their first house, okay? And why not buy your first house with interest rates at an all-time low? And also, millennials have never been through a market correction. So they see YouTube videos, they see the news, they see everything going on in the world, but they've never been through it before, right? So they're also contributing to what it is that we're seeing. Again, there's all of these different little factors that we're gonna peel back the onion, and by the end of the video, we're gonna be able to really look and see what the housing market is gonna do over the coming months, maybe even over the coming year. According to First American Financial Corp, they're actually saying that millennials could be responsible for 15 million home purchases over the next decade, okay? So this is like massive, massive stuff that we're seeing, and it really is a perfect storm, all the way from the pandemic to the Fed printing money, to the stimulus money going into the economy, to the overall supply and demand, the moratoriums getting extended, and just everything of the sort. So we talked about this a minute ago, but another thing to remember is that supply is at an all-time low. Now, there's a lot of different people that will tell you why they believe supply is at an all-time low, and in my humble opinion, I think that there are multiple different reasons, but let's just talk about a couple of the facts, okay? The fact of the matter is, in 2020, during the pandemic, I know firsthand that most people didn't want to sell because there was a lot of uncertainty. And they didn't want to have to move. They didn't want to have to call a moving company and actually move in the middle of a pandemic. And people still don't want to move, okay? So that is a very, very big reason that supply was at an all-time low. Another reason is, okay, well, let's just assume that you are gonna sell. Where are you gonna move? There's no supply on the market. So if you unilaterally have everybody in America that, supplies at an all-time low, then everybody's got the same mindset that if they do put the property for sale, where are they gonna go? Because if they travel across the country to go move, the supply is gonna be at an all-time low over there as well, and they're just gonna have to overpay for a house over there because housing prices, again, are just going up. Okay, so there's a lot of things that you really have to look at and peel back the onion here. And another reason supply is low is because people also aren't being forced to move, right? Because they keep extending the moratoriums. They extended the foreclosure moratorium. They're extending or have already extended the eviction moratorium. It looks like they're gonna keep extending the moratoriums, okay? Gavin Newsom extended the moratorium in California. We're seeing that the new administration came in and right off the bat extended the moratorium. And if the bill, the new stimulus bill, the $1.9 billion stimulus bill gets passed, and they're going to extend the moratoriums again. So they're not having to move, right? Not only do they not really want to move, but they're not being forced to move. Because normally, if people can't pay their mortgage, what happens? Well, they go into foreclosure, okay? First, they go into pre-foreclosure. They kind of default on their mortgage. They go into pre-foreclosure and then foreclosure. Their house goes to get auctioned, and they're forced to move, right? And now they've got a foreclosure on their record, and they go and they rent or they do whatever, okay? But that isn't happening, and I've talked to a lot of people in the industry, and I'm trying to really give you facts only. And what I'm seeing is that eventually, when the moratoriums are eventually over, which honestly, who knows when that'll happen at this point, but what they might end up doing is they might just do a bunch of loan modifications where they take all of the missed payments and they just tack them on at the end of the mortgage. So basically, it's not like they would have like 10 grand to pay all at once. That isn't what would happen, right? It would get added to the end of the mortgage essentially, which in a nutshell wouldn't cause a big like foreclosures spike, okay? So a lot of people are like, there's gonna be this massive wave of foreclosures, but the reality of it is, depending on how involved the government gets, if they do loan modifications or whatever the case is, you might not actually see a wave of foreclosures. So on top of everything, you still have about 10.1 million people unemployed as of January of 2021, and GameStop rallied last week 400%, okay? So I guess what I'm trying to say here is that you could look at all of the facts all day long, and to be honest with you, none of them make a whole lot of sense, okay? But we're gonna keep going, and if you haven't already, all I ask you to do in return is just smash the like button for the YouTube algorithm. So there's a couple other things that I wanna just look at really quick. So another thing is that rents are not keeping up with housing prices, okay? And also, income is not keeping up with housing prices. So the affordability of housing is basically non-existent. I mean, people can't even really afford what it is that they're buying, okay? Or where they're renting. So the affordability is almost not affordable, especially in a lot of your bigger metropolitan areas. So we're gonna go ahead and we're gonna take a look at a couple of different graphs to kind of break down what I'm talking about. So we're gonna go ahead and we're gonna look at income compared to the home price index, and we're gonna kind of go back in time a little bit. So, back in, like, let's just say, 2000, okay? 2000, they're pretty similar, right? You can see they're right next to each other. And then we kind of get up here to 2005, 6, 7, and 8, right? When we obviously had, what a lot of people call the Great Recession, okay? The housing market obviously crashed, and you had this massive gap between the housing index, okay, the affordability basically, and then the income, okay? And then obviously the housing market corrected. You can see the income kind of is just almost linear. The income's just linear going up. And you can see here actually for just a short period of time, the income actually surpassed the housing affordability basically, okay? And then obviously, as we got out of that recession and we started to rebuild, the income kind of stays linear. And now, as of 2020, pandemic, okay, you can see that it basically, it just goes straight up. I mean, in a pandemic where you would think the housing market would crash, the stock market would crash, everything would crash, it did momentarily. We took a V-shaped recovery almost immediately, and now you've got this big gap again between the income, the affordability basically overall of the houses and the average American income. So another thing we have to look at too is that new builds are also down, right? When you look at it, labor actually is kind of at an all-time high, and also supplies are at an all-time high, right? Getting lumber right now, getting wood, getting materials to build new houses is at an all-time high in a lot of areas, okay? And it varies depending on where you're at in the country, but new builds are definitely not keeping up with the demand of people that want new construction, right? And we saw with the pandemic, and I've made other videos on my channel talking about this, over the last couple of months, but a lot of people wanted to move to the outskirts of these different big metropolitan cities, right? Because a lot of the big corporations were telling their employees to work from home, and the people basically decided that, they wanted to have a gym in their house. They wanted to have an office in their house. They wanted to be able to, kind of stay at home, right? So instead of living in a high rise or living, in the downtown general area, they wanted to move to the outskirts of town, right? Which a lot of times is new construction, okay? But if the new builders aren't keeping up with that demand, then again, you're left with a low supply, because those people that would potentially, theoretically, move to the outskirts of town are not going to if it doesn't exist, which is gonna cause them to stay where they're at until it does exist, which is gonna cause supply again to come down. So you actually even have big companies like Stripe, okay, the big payment processing company. You've maybe heard of them and maybe you haven't, but a lot of big people use them. They're actually offering their employees $20,000 to move away from big cities such as New York, San Francisco, and Seattle, okay? Because again, a lot of people are working from home and they're basically paying people to go to the outskirts of town. But again, as we obviously talked, the new builders and the new construction is not even able to keep up. So overall, you obviously have a lot of different things affecting the housing market, the real estate market, and overall, the potential bubble that some people are kind of calling what we're in. And to be completely honest with you, I don't want to really even dive too much into what I think, because I think a lot of people are talking, but I don't think a lot of people really know. And the reality of that is that you can't almost know, because we don't know how long the government is going to keep stimulating the economy. We don't know how long they're going to continue to print money. We don't know if they're just going to continue to push back the moratoriums. We don't really know what is going to happen. What I can tell you for sure is the wealth gap is getting bigger and bigger, right? Because, who owns these assets that we're talking about, right? Typically, it's middle class, upper middle class, and then obviously the wealthy. And, pumping all the money into the economy is just causing the asset classes to go up. So, look, unfortunately, right? Unfortunately, because you actually don't want that big of a wealth gap. It isn't necessarily healthy for the overall economy, right? You actually want a really large middle class of people. So I know that was a lot to digest. I know that there's a lot going on. The one thing that I wouldn't do no matter what is I wouldn't wait, okay? If you have your finances figured out and you can afford it and you have an emergency fund, you have savings or whatever the case is, I wouldn't necessarily wait to buy a home. And the only reason I say that is I see people do that all the time. And we saw that even back in the day, right? And ultimately the people that could actually afford the house that they were buying, a lot of those people survived the ups and the downs, and they always have, because they weren't forced to sell, right? So as long as you don't get backed into a corner where you're forced to sell, then you can't really lose. And you can ultimately never time the market, and that's just facts, right? Nobody knows what's gonna happen, exactly when it's going to happen. So you can't time the bottom of a market, and you only know when you're at the bottom when looking back, right? In retrospect, because hindsight's always 20/20, okay? So never try to time a market, again, in my opinion. That would just be like my advice. But again, my advice would be, if you can't afford something, don't buy it, okay? But if you can, I don't see a problem. Interest rates are at an all-time low, and typically when interest rates are low, prices are high, and when prices are low, interest rates are high. So you're gonna get one or the other kind of regardless. But again, that is just my 2 cents. Okay, I'm gonna make a lot more videos talking about this particular subject. If you have interest in this subject, then definitely feel free to subscribe to my channel if you haven't already. I would greatly appreciate it. And I also talk about a lot of other stuff on my channel, so definitely check out that content as well. I look forward to seeing you in the next video, and thank you so much for watching.